So I've been getting a lot of comments recently asking me to discuss Nokia Stock, which is a very popular 5G stock, especially here in the YouTube community. And this company's stock just crashed 30% over the last week after they reported their earnings. And going into 2020, 5G is going to be a major focus for both consumers and companies because that's kind of the future of where technology is heading. So we're going to see a lot of companies, even companies like Apple, releasing consumer devices that are 5G capable. And of course, we're going to see carriers and all that stuff adopting 5G technology as well. So the real question I really want to answer in this video is, with this recent 30% dip here in Nokia, is this just a buying opportunity for us? Or is there more behind this company that we should be aware of before we consider an investment here? So I'm going to go through the financials, going to go through the earnings report that just released, and at the end of the video, I'm actually going to discuss what I plan to do with Nokia stock, if I plan to invest in this company or not. So stick around for the whole video to see that as well. Now, if you're excited for the 5G revolution, make sure to hit that subscribe button down below. Like challenge for this video is going to be 250 likes. I know you guys can do it. So anyways, getting into the meat of this video, I think the best way to understand what's going on here with this company and the stock is to start off with the earnings report that they just released. This slide on the screen here really gives you an understanding of where Nokia is today as a business. They start off by saying that they had a good Q3 and expect a good Q4. However, they are lowering fiscal year 2019 and fiscal year 2020 guidance. This seems a bit contradictory here to me, and this, I'm sure, confused many investors. I would personally interpret this statement as a negative piece of information, because if everything was truly strong and Q4 is expected to be strong, the company would be looking to maintain or even raise their guidance. However, with them lowering guidance, it generally is a sign of weakness in a business. Next, they state that the dividend payments will be paused while they use that cash to reinvest in the business. This statement right here, in my opinion, is what drove most of the sell-off in the stock last week. In an official statement, Nokia says that they will be stopping the dividend for this third and fourth quarter to help with three things: increase 5G investments, invest in other aspects of the business like enterprise and software, and the main reason I think here is to increase their cash balance. They then state that they expect to resume the dividend payments once their balance is back above 2 billion euros. Now, when investors put their money into a dividend paying stock, they expect that company to maintain that dividend and in most cases raise that dividend year over year. But here in this case with Nokia is what I'd call a dividend investor's worst nightmare, where a company actually comes out and cuts or pauses that dividend. And the main reason, like I said, is because the company cannot financially sustain this dividend while it continues operating and potentially growing the business. So as a result, many investors who bought into the stock solely for that dividend are selling off shares in their positions because there's not going to be a dividend from this company in the next few months. And there are better companies out there, even ones in the 5G space, that do pay out dividends. So why would you keep your money here in Nokia if you're solely looking for dividends? But now the question we need to ask ourselves is, was this 30% sell-off on this news overdone? I completely expect a sell-off, like I said, when news like this comes out. However, a 30% sell-off may be a bit exaggerated here. So what I thought we'd do is look at kind of the balance sheet of the company, where the company is financially here, and see if this is just a short-term blip and if this could be a good buying opportunity right now for us. So while net sales were up 4% year over year, other metrics investors care about, like profits, margins, cash balance, were all down, and down significantly in some cases year over year. This means that the business is struggling to make more money even as revenue grows, which is generally not a good sign for any company. This graph here shows us a breakdown of the business quarter over quarter, and you can see that growth isn't exactly impressive. It's more or less been flat for the last year, and really from a global perspective, we're seeing stagnation when it comes to their net sales, with China actually showing us a decline here year over year. Remember, Huawei, which is another huge player in the 5G space, is a Chinese company, so I suspect this piece of the pie that Nokia has right now will only keep decreasing as the Chinese government and Chinese companies favor Huawei over the competition like Nokia. So really what I see here with this balance sheet and these financials is a company that really wants to capitalize on the 5G revolution, but is truly struggling to do so. And like I mentioned, there are companies like Huawei, even companies like Ericsson, that are fighting for a piece of this pie. So it's not going to get any easier here for Nokia going forward. So that's another thing as a potential investment or an existing investor to keep in mind. Nokia will really have to put a lot of money here into R&D to kind of leapfrog the competition, if that's even possible here at this point. But therein lies another problem. Their cash and cash equivalents currently sit at 4.82 billion euros. But when we look at the same time last year, they had 5.61 billion euros in cash and investments. During this time, they had paid down some of their short-term debt, but the long-term debt now has almost doubled, sitting near 4.8 billion euros currently. It's not too bad compared to other companies we've looked at on the channel, but when we look at their free cash flow, it only sits at 273 million euros in the recent quarter. And while it is better than the last couple of quarters where the company lost almost 1 billion euros per quarter, it needs to be much higher in my opinion if they plan to bring back that dividend, as well as have enough cash to stay competitive by reinvesting back in the business. So really what I see here is a company that wants to grow, wants to capitalize on 5G, but really from a financial standpoint, they aren't exactly impressing investors, they aren't exactly growing massively year over year, and I would say their performance at best would be mediocre here. Analysts are optimistic here at these prices, seeing close to a 30% upside in Nokia, which ironically would not even bring us back to the prices before this past week. So even though this may be perceived as upside or bullishness in the stock here, in general, there isn't much optimism when it comes to Nokia. Okay, so the big question, of course, like promised, I'm gonna answer the question now. Am I buying Nokia stock? Well, here's the thing. I do believe that 5G is the future, and I do believe that 5G is going to help a lot of companies build out more revenue streams and build out their profits in the coming years. And as an investor looking to invest in 5G, I think there's really a few ways you can really play this space. The first is maybe going directly to consumer-based products like phones, invest in companies like Apple, who plans to release the 5G phone sometime soon. Or you can go and look at semiconductor companies who are developing chips that are 5G capable to go in these consumer type devices. Companies like Skyworks Solutions, for example. Or you can look at companies like carriers, Sprint, AT&T, Verizon. These are companies expected to carry 5G technology moving forward. Or last but not least, you can look at companies that actually build the base station and are setting the 5G standards, like Nokia and Ericsson. So you can see there's many different ways you can approach the 5G revolution as an investor. Now personally, my decision here is actually to approach this from a consumer standpoint, which means I'm not really interested in companies like carriers, I'm not interested in companies like Nokia or Ericsson. I'm more interested in companies that are in the semiconductor space. I'm more interested in companies that are like Apple, which will actually, in my opinion, have huge adoption with their products and will constantly be able to update these products year after year, generating more and more revenue, more and more profits, and that entices me more as an investor. Also, when it comes to things like Nokia or Ericsson or Huawei, it's really unclear to me right now who's going to win this race when it comes to the adoption of technology. I do understand that Nokia is one of the top players here when it comes to setting these standards. However, I do think that Huawei may actually be a serious threat for them going forward. So because of these reasons, I don't really feel comfortable, especially at this point, especially with the balance sheet, especially with everything that we've discussed today, to really invest in Nokia today. And really, even with this 30% drop we see here on Nokia's charts, it was pretty much flat for the last year until this past earnings report. And at first glance, this may seem tempting to pick up a few shares, but when I zoom out here and give you some more perspective on this stock, and we look at the last few years in this stock, the picture is a lot worse. Nokia was once a $60 stock back in its prime, back when we had the dot-com bubble, and then it had another run-up before the 2008 recession. But since then, the stock has had a very hard time convincing investors that they are a force to be reckoned with, and I'm starting to see why after doing this brief analysis here on the company. So guys, am I buying Nokia stock? Like I said, no, I'm not interested in that right now. I think this company really needs to figure out what its plans are for the next 5-10 years or so, and they really need to bring back that investor confidence by bringing back that dividend and showing investors that they can sustain that dividend while growing the business. If it's going to be one or the other, that doesn't really give me much confidence, especially for a company that's been around for so long. And really, another way you can look at this is that management does not feel confident that they can sustain a dividend while they continue growing this business. And that could be seen as a negative because there may be other factors here that we don't know about yet that management sees in the future, which could severely impact the business and their bottom line. And guys, there's so many stocks out there, like I discussed, when it comes to 5G, so I have absolutely no problem skipping Nokia here as an investment. But I really do want to know if you are a Nokia shareholder. Let me know in the comment section down below. Let me know if you are. Let me know if you're considering buying the stock here, especially after this 30% drop. Or let me know if you agree with me and why you choose not to invest in Nokia. Guys, thank you so much for watching. Hope this video was valuable to you. But either way, don't forget to invest positively, and I'll see you in the next one. Peace.